Let me break down this AUDNZD long setup where I took a loss, but more importantly, how I could have avoided this loss. Because if you do not learn from your mistakes, you're just throwing money away without improving. In this video, I'll show you exactly how I entered this AUDNZD long, why I hit my stop loss, and the key things I missed that could have saved me. Watch this so you can avoid making the same mistakes in your own trades. So how did I enter this trade? Well, I made sure that I used my trading checklist, which is based on structure, supply and demand, liquidity, order flow, premium versus discount, and my entry model. So what I do first is go over to my higher time frame, which is my weekly time frame. So first of all, I look at my weekly structure and I could see that we're bullish, so that in the end we could trade up higher in towards the swing high. Now what do I also see? That we are consolidating, and in consolidation you cannot really see if we're going to trade up higher or down lower because everything could happen. So then I take a look at strong zones. So I'm not a support and resistance trader, but still it is super important to take a look at it if you are in a range. So I can see that this is a strong level because, as you can see, we react a lot from that level, and then I could think that we could trade up higher from this support and resistance zone. So I trade logic. So with that logic in mind, this could be a point where we could start to trade up higher from. So what do I then see is that we have this demand zone which pushed price back up higher, and then we had this imbalance candle which is now in control and could push price back up higher in towards these liquidity highs, which I'm definitely looking at to get taken out, because we have 1, 2 and a third liquidity high, and if we stack multiple highs close to each other, then that's a point where I would like to trade towards. So scaling over to the daily time frame, I know that I want to trade towards these highs, and I think that we are inside a nice point of interest to trade towards. So looking at my swing structure, as you can see, it's super big. So I do not really want to trade this swing because it's so far away. So then I just look at the current order flow. And what can we see? Well, our order flow is clearly bullish. Why? Because we keep on respecting these lows and we keep on just trading up higher, 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 higher. And what happens is that we every single time break the highs once we respect a low. So we could just now trade up higher in line with that bullish order flow. So at the moment, we've seen that we grabbed liquidity underneath the lows, tapped in towards this demand zone and pushed price back up higher. Now what happened? We created a new demand zone. How did this happen? Because we sold to the downside, traded up higher, then sold to the downside again, and then traded up higher, which then this is your sell before the buy, which is your demand zone. We grab some internal liquidity underneath this demand or inside this demand, which is a nice point to trade up higher from in towards those weekly liquidity highs where I want to trade towards. So then I go over to the 4 hour because I have my higher time frame analysis, which is going to be bullish, and I want to trade towards all of these weekly highs, and that's the end goal. But for now we could just target all of these liquidity highs over here. So what do I now see? On the 4 hour, based on structure, we are bullish. Why? Because we trade up higher, down lower, up higher, down lower, up higher, down lower, up higher. So now we are bullish. We traded down lower, we got a pullback, and now we could trade up higher again. So with that in mind, this is perfect in line with the higher time frame. So then I take a look at supply and demand. Now what do I see? We came in towards this daily demand, and then we grab liquidity and we trade it up higher. So we have demand, we also have liquidity, and like we said, we also have order flow on the daily time frame, which is bullish. So that's also perfect to trade up higher. Looking at premium versus discount, we're also inside discount prices, which could mean that we could trade up higher. So we trade down lower over here, and then we trade up higher. So what is your swing low? That's going to be this low, and your swing high is going to be this high. So the 50% of that is this blue line over here. These are going to be called discount prices and this premium prices. And once you tap those discount prices, you could then trade up higher in towards the swing high. So since we did that and we got a pullback in towards these discount prices, from that point, you could start to look for longs. So once we took that liquidity, I was ready to start looking for longs. But the order flow still was bearish on the 4 hour. Why? Because we were respecting every single supply zone and we were trading down lower. So what did I do? I waited for the order flow to switch, which was right at this high break. right? Because what did we have? We had supply zone in control, and then we had this supply zone in control, and then at that moment that we break that supply zone, right, with this candle, we switch order flow, boom, and we create a sell before the buy. So then we created a bullish order flow, and then this is going to be your demand zone in control. So from that point, you could look for those long setups, trading up higher in towards the highs. So that was also when I wanted to enter, but at that moment it was night, so I couldn't enter the trade. So what did I do? I waited for the next break of structure in the morning. So I woke up around over here and I saw that in the night we actually flipped bullish order flow. So I woke up over here and then I said to myself, okay, I'm going to wait for the double fractal break, which is going to be this high over here, and then you create another demand zone, and then I was looking to trade up higher. So what did I do? Once we broke that high over here, I set my entry on top of that sell before the buy, which is going to be this sell before the buy. This is going to be your demand zone in control, and you could start pushing up higher. So I placed my entry on top of that demand zone, stop loss underneath the demand, and then I targeted for a 1 to 3 to take out the liquidity highs. So you can see that for my entry model, what did I use? I used fractal breaks. So for my confirmation, I waited for the order flow to switch bullish, because then I could have checked off everything from my checklist. But then you had the entry model, which I still needed to check out, and that was going to be after the fractal break. So this was also a fractal break, so after this it was also valid, but since I was asleep at that moment, I waited for another fractal break to break up higher, and then we could long again. So this was the entry that I took. What could I have done better here is definitely my stop loss placement, and that will also mean that my entry placement would also be different. So what do we know? This low over here takes out liquidity and then causes a break of structure in towards the upside. So this is a really strong low. So preferably you would want your stop loss be underneath that low instead of somewhere else. So this would already been a better trade, right? Because now you can see you sometimes swipe some liquidity and then you trade up higher. So that's why I could have done better. Now the second thing is, why did I place my stop loss underneath over here? Because I know that sometimes, in most cases even, when you get a double fractal break to the upside, which I will show in a second, like we had over here, you often take liquidity underneath the second break and then you trade up higher. So what do I mean by this? Over here you trade up higher, you trade down lower, and then you trade it up higher. So this was your first fractal break, breaking above this high. You then trade down lower, and then you trade up higher, breaking the fractal high one more time. So this is your double fractal break, and what you often see is that you grab liquidity underneath the second fractal break. So you have the second fractal break, this is your low, and you often grab liquidity underneath that low, swiping those buyers, and then you trade up higher. So that's what you often see, and that's also what happened in this case. So with this in mind, the better entry, what I could have done better, is be patient and take the safest trade. So yes, we could have already traded up higher like this, respecting this demand zone, and that was also why I took this trade more aggressively, because that was possible. But now what did I see? I just need to be patient and wait for the best entry. So what I could have done is definitely place my stop loss underneath this strong low, and then where could I have entered? Well, on top of the liquidity of the second fractal break, right? Because we know that after the second fractal break, you sometimes grab that liquidity and then move up higher, which we did at this moment. So with this entry, there was a lower chance that you could have entered the trade, but once you got entered, there's a high chance that you will take profit. So this is eventually a better trade and will give you a higher win rate in the end. So I hope you guys learned a lot from my mistakes here and could take the mistakes to your own trades so that you won't make these mistakes yourself.